Welcome back. Before we discuss more fundamental cues, we need to see what the futures and options space is looking like. Manoj Muralidharan of Religare Securities joins us now. Thursday particularly important because of the weekly futures expiry. Good morning, Manoj. First, your take on the Nifty Bank.
Good morning, Lata. Lata, if you see, the volatility index has made almost a live low of 9.8 yesterday, and I'm sure we know that that is because of the dividend we have, and there is a correlation between the Nifty futures and the option, that is. So the strategy here is we are seeing a lot of index option buying by the FI. That's a good strategy where we are seeing some futures being written and the call option being bought. So because today being the weekly expiry, we expect we might see levels of 11,720 to 740. That happens to be the weighted average price. So the strategy here is to buy Nifty futures close to 11,630. Stop loss of 11,580 for a target of 720. Likewise, you can simply buy a 11,650 call option for today's expiry as well. For the Bank Nifty, the levels would be to buy at 30,600. We are expecting a weighted average price of 30,860 to 850 as a target. Stop loss should be 100% downside, 30,500.
Okay. What about, Manoj, hi, good morning. What about individual stocks? Would you have any specific stock ideas for today?
Yeah, good morning. Sonia, I guess Industrial and Kotak yesterday, even we saw the traction was quite good along with Bank of Baroda, but then we still vouch for these two. So Industrial would be the topic today as well. Let's say 1498, we recommend buying that. The target should be somewhere close to 1560, and we expect the stop loss should be, let's say, 1472. Kotak Bank is positive as well, but for today's trade specifically, because it is the weekly expiry, we are expecting more buying or the follow-up buying to come in that. ITC is again a favorite because this works only in the last 7 to 8 days of the monthly expiry, so that would be next 25th of July. Buying it at 272 is what we recommend. The stop loss should be, let's say, 264, and we are expecting 286 to 88 roughly. That should be the expiry we might see it for ITC at this point of time.
Okay. What did you say about Nifty itself, Manoj? How are you expecting the day to pan out?
Lata, we expect that 11,600 to 630 would be the support, so we advocate buying that on futures. The target should be 11,720, or likewise for the weekly expiry today, 11,650 call option can also be bought. You know, because the reason I was saying the VIX is almost at 9 because of the dividend factor that we have, and there is an equation between the Nifty futures and option. So buying an option of 11,650 strike call option or futures at 11,630 is what we advocate. The stop loss should be 11,580. Target is 730 on the Nifty futures.
Okay, well, thanks Manoj for joining us and giving us all of those ideas. It's not a very big day for earnings today. We have, in the large caps, we have only ACC that will be reporting their numbers. Nigel is here to give us the lowdown on what to expect. Hi Nigel, morning.
Well, morning Sonia. You know, in the last few days, ACC cement has moved up by roughly around 7 to around 8%. That's in the last 10, 12 trading sessions odd. Remember, valuation-wise, it's always been attractive. It trades at less than 10 times EV upon EBITDA, and it trades very close to its replacement cost as well. So valuation comfort has always been there for ACC. Now, in terms of the numbers, on the top line, we're expecting more or less a flattish number, or maybe there'll be a mild growth of around 1% approximately. Now, volumes will be lower because demand has been low, and it was an election quarter as well. So volumes we're working with is closer to around 7 million tons. That will be a degrowth of around 3.5% odd. What supports the numbers? Those realizations. Realizations will jump up by 6 to around 8%. Remember, ACC Cement has exposure, across the country, but their exposure to South, East, as well as Central India, that's what's going to help the realizations. Moving to the margins, we are going to be having, a flattish top line, but operating profit will jump up by around 10%. That means margins will come in higher by around 150 basis points. What really supports that is higher realizations and more or less flattish to reduce input costs, because fuel costs as well have come in lower. And they've also signed a master supply agreement with Ambuja Cements that enhances the profitability as well. In terms of net profit, we're working with a number closer towards 400 crores odd. I understand that the meeting starts post-lunch, so maybe these numbers will come in post-market hours. Back to you.
Well, thank you very much for that, Nigel. You already drilled into our heads when you did the quarter say, quarter thak explanation that realizations are going to be good and not volumes. So we are pretty prepared for the ACC numbers. Thank you very much for joining us this morning. We're still about a couple of minutes away from the opening, pre-opening trades, but we have another expert joining us, Deven Choksi of KR Choksi. Good morning, Deven. Well, I have to begin with Wipro. How would you approach the stock? Disappointed?
Yeah, Lata, good morning. Well, I think Wipro is no exception. I think it continues to disappoint. Probably the amount of clarity and conviction that you get in TCS and Infosys, I think the same level of conviction is missing in Wipro for some time now. Whether I think I would like to attribute it to I think the little slow pace in which I think the change in the business model is happening, or whether one could attribute it to I think relatively lower ticket customers that they are adding into the portfolio. I don't know enough I think on that aspect, but I feel that I think the client that Infosys, and particularly in case of TCS, the way in which they are giving the visibility of the new clients that they are adding with a large ticket, and that too for a duration, I guess I think the same level of clarity probably is missing in case of Wipro. So I would think that within the frontline IT companies, the Infosys and the TCS in that order, I think would be the relatively safer choice to I think stay with.
Okay, well, there's some negative news coming in. The Met Department says that India has received 20% lower rainfall than average in the week to July 17. There is, of course, still a deficit as far as the overall rainfall is concerned. And in states like Gujarat, etc., there's been a fear of a further delay in rains, affecting a lot of the crop, etc. there. So this doesn't come as good news at all.
Put it in perspective, we did speak to the Met Department 2 days back, and they said while the June deficit was 34%, at the end of 2 weeks of July, the deficit has come down to 12%. So while you may speak about the week, the overall deficit has come down. We have to maybe hope that even that deficit is wiped out, because the Met's forecast for the full season is 96% of long-term average.
Yeah. So they've been giving us, I think, a weekly update as well, just to get a better sense of where things are as of now. But this is the pre-opening rates kicking in.
Stronger.
The rupee has strengthened a tad bit. 68.76 is where the rupee is at. But I would be more interested to see what individual stocks are up to. Yes Bank is down 10% in pre-opening. Let's see where that one adjusts. Wipro is under a lot of pressure as well. 2% lower on Wipro, and Mindtree in the broader markets. It was a howler this quarter around for Mindtree. So that stock is also down about 10%. I think these are the three stocks that will be in focus first up this morning. But apart from that, Lata, looks like it's not such a bad fall as the SGX was indicating. The Nifty is down about 15 odd points in pre-opening.
Yeah, let's wait and see. I mean, things will take time to settle down. Yes Bank is the only sore point on the Nifty at this juncture. Wipro has looks like it had already digested the fall, but really very, very early days at this point in time. So we will have to wait and see how things pan out, and whether the banks are showing any sense of recovery, because they've got a lot of things positive going for them. Crude is lower, and the IBC amendments are going to work to their favor. So it's quite possible that they are front foot forward, the Nifty Bank, and it's only Yes Bank that will struggle. But struggle it is. Yes Bank still remains down 10%. That is its 52-week low of 88 rupees. Devin, how would you approach Yes Bank?
Yep. On one side, I think, Lata, the commentary coming in from the management, I think, is showing some amount of promise. I particularly like the way in which they are approaching. They are saying that the profit that they would be generating from the business would be sufficient enough to, I think, provide for the slippages going forward next 8 quarters, which means that new capital that they would have, it would be, I think, for the purpose of growth. So this statement probably, I think, assumes, I think, good amount of significance. And should they be in a position to, I think, stick to what they have said in this particular commentary, I would probably think that one will have to look out for the better times going forward for Yes Bank. Definitely, I think it means a lot when you, I think, give this kind of statement. I think it remains to be seen whether in successive quarters, I think the numbers follow, or what the management has said in this particular quarter. So would like to remain a little bit more positive than before as far as Yes Bank is concerned.
Okay, DCB Bank is starting 1% higher, and I thought yesterday the selling was overdone. It's a one-off bad quarter, and in the past the bank has bounced back after one-off bad quarter. So yesterday 16% or thereabouts of fall in the stock was perhaps overstated. Today we are seeing 1% higher. What would you do with DCB, Devin?
Not enough amount of, I think, study that I have carried on this particular bank, so would refrain from putting any further comments at this juncture.
Okay, well, the other stock that continues to see a downtick is Strides. So just pull up that stock. It was one of the biggest losers yesterday after the warning letter came through for the Puducherry facility. Okay, now it's making a bit of an attempt to recover. So let's see how that one shapes up. But Mindtree is really your biggest loser right now. Devin, what are your thoughts here? The company has scaled down its guidance, its record low margins, but the stock has already fallen quite a bit. At this price, what would your view be?
A lot would depend, Sonia, on I think what is going to be the future strategy of this particular company. I think the what we have seen is a result of somewhere I think the failure of the earlier strategies, as I would like to term it. But maybe I think one would like to see and experience the commentary of the management, particularly I think after L&T has taken over. I would like to see I think what kind of strategy they want to put in place and the kind of direction they are setting in. I think till that point of time, I would like to reserve my view on this particular company. Maybe I think they have potential, but we'll have to see how exactly they are planning their strategies for growth.
Okay. Well, it's important to note that the bond yields have opened lower. Once again back to 6.3. Yesterday they opened at 6.27 and then the yields rose all the way to 6.35. Today the yield has opened marginally lower at 6.31. That also will be bank positive. So let's, I'm just counting the blessings for the banking space. They may be able to counter the negativity in the IT space today. Well, any other IT stock you like, Devin? I mean, generally what would your buy lean towards?
See, ideally, I think we have been liking within the mid-tier this Tata Elxsi. The result has come a little bit disappointed. But as we understand, and I think this result probably is largely because of the fact that one of the main clients in JLR, probably I think they have started slowing down for the capex I think that they have been incurring, particularly in the autonomous vehicle platform. And that's the reason for which I think this quarterly disappointment on the numbers. But the company continues to receive higher amount of orders in all directions, including in the new areas of airports and railways. Probably I think they show a lot of promise and potential. So from that perspective, yes, I think the company remains very high on potential. Maybe I think because of the result, it has probably corrected or may correct a little bit. I think that could be the opportunity to look at Tata Elxsi from the investment perspective of next 1.5 to 2 years.
Okay, well, looking at some stocks that have become cheaper over the last 6 months, Tata Elxsi for sure is one of them. Just a couple of more names. Reliance Power should be up for you. There's that ICRA downgrade that has come in on both their long and short-term ratings have been downgraded to D. Reliance Power, in any case, is just a sub 4 rupee stock. Everready, one more downgrade there. India Ratings has downgraded the long-term credit rating on Everready to BBB minus, so that one's down about 1.5%. And Prestige Estate should be on your radar as well. Reports indicating that Prestige and DB Realty have signed up. They formed a JV for 2 office project deals in Mumbai. So let's see how that shapes up. But Wipro is definitely one of the big stocks on our radar this morning, post the weakness in numbers. Let's hear out what the Wipro management had to say with regards to the slowdown and particularly on BFSI, which has weakened for them for the last few quarters.
We did see a little bit of slowdown, especially in a couple of our growth areas. One of them was banking and financial services, where we saw a little bit of stress in capital markets as well as in the European banking space. And in consumer business, where a couple of projects that had got over in Q4 and we were expecting newer projects to start in Q1 have taken a little longer to get started. Although both of these verticals have grown at about 11% year on year for BFSI and a little under 8% year on year on consumer, it did slow down in Q1 a little bit. And that has kind of created a slower start to the year. BFSI, I'm quite confident that Q3, Q4, it should rebound. On manufacturing, the US manufacturing is looking good for us. The continental Europe manufacturing will take some time. By Q4, I would guess. I would not hazard a guess on what happens with the HPS platform around the Affordable Care Act, simply because the political uncertainty can't predict when this will be back.
Only priority right now is to catch the momentum on the growth side, and for that we remain invested in big bets. We'll remain invested in the things that we need to do to catch demand in right areas. We will also have right investments that we need to make in geographies and so on and so forth. And on the other hand, we'll have to remain very, very focused on efficiency gains that we can bring out. Headwinds are in form of exchange. Headwinds are in form of 2 months impact of salary that we have given in Q1.
Okay, the Nifty Bank numbers, first rates are out. It's 0.1 down in step with Nifty. My sense was that maybe it would be able to do a little better, but it is getting negativity from, of all things, Kotak Mahindra Bank. Kotak Mahindra Bank was providing its shoulder to the Nifty Bank yesterday, but today it has succumbed to profit taking. But the other public sector banks as well as HDFC Bank are still in the green, so things could. ICICI Bank is in the green. I mean, anybody who benefits from IBC is in the green, as well HDFC Bank, which is of course neutral to it. Let's see how the Nifty Bank goes. My sense was that it would outperform a bit. We still have time to get the 9-10 calls, so let's listen into what all the brokerages are saying about the Yes Bank numbers. Mangalam?
Well, the brokerages are not one bit happy with Yes Bank's numbers. We have a handful of them, Lata. We start with Credit Suisse. They've taken the sharpest cut in the company's target price that they have from 205 rupees to around 94 rupees. Why do they say that? The drop in the company's low-cost deposits indicates that there is a pressing need for capital. At the same time, their common equity tier 1 ratio is down to 8%. Even of that, 35% is NPA. The gains were supported by treasury cover. Not sure whether this may continue or not. And provision coverage remains low as well. So let's see how this pans out as far as their expectations of capital raising are concerned. They've cut their EPS estimates by 72%. With that, we move on to Jefferies, which has the lowest target price on the street, 50 rupees for Yes Bank stock, and they retain their underperform rating because they say the first quarter numbers were far worse than what they expected. In fact, their below inventory grade investment grade book is now higher to around 6,500 crores. We have Morgan Stanley as well underweight, and a sharp cut coming in from Nomura from 230 rupees to about 110 rupees. So brokerage is definitely not happy with Yes Bank results.
Okay, thanks a lot for that. Yes Bank is indicating a 10% downtick in opening trade. The market, by the way, has settled with cuts of around 12 odd points. It's 9:10, so let's get the big calls out of the way. Ashwini, what would the big call be at 9:10 this morning?
See, basically the index is likely to remain sideways. So while it may go down initially, but I would think that around 11,640, 650 will find support and start moving back up. Other than 4 sectors, all sectors are negative. So initially you will see a bit of decline post the open. As far as individual stocks are concerned, SBI is a buy with a stop of 368, target of 382.
Okay. Mitesh, what's your 9-10 call?
I would choose a sell on iShares with a stop at about 18,800 for targets close to about 17,500.
Okay. And Jay, what about you?
I'm going with a short on Larsen & Toubro Infotech. You know, it's faced resistance at 1670 and reversed in yesterday's session. And I don't think Wipro's price action is going to help. So I think as a sectoral move, I think it's likely to go a little more lower, placing a stop above 1670 and expecting to drop below 1550.
Okay. We'll just come back to you to see whether you all will fish in any of the troubled waters like Yes Bank and Mindtree. But before that, Deven, how are you looking at the markets generally? Do you think that you should pull out your shopping list after a bit? Do you think it has scope to go down further?
Well, Lata, I think market remains quite indecisive. At the same time, you don't have enough amount of open interest in derivative market to suggest in which direction it is moving ahead. I would think that on the other side, the foreign investors wanting to sell more but unable to sell because of the lack of depth of the liquidity in the market. That continues to remain, I think, a little bit, a pressure point as far as I think the market is concerned. Otherwise, if I start looking at some of the companies, I think in their valuations, they have really become attractive. In many of the mid-size and smaller size companies now, I think from what mid-size they used to command earlier, I think there is a requirement to infuse additional amount of capital and restructure the balance sheet. Necessarily their businesses are good. I don't consider that many good companies are not having good business, and they are having good business models. Unfortunately, I think their financials are not probably in right order, and that requires to be, reshaped. So suppose if I look at, in some of the companies' cases, they have the large amount of earning potential and the earnings that they have been carrying out in past. Unfortunately, I think their inability to manage the cash flows and the payments, I think that is coming in the way. If they do get capitalized, probably I think some of these companies are showing good amount of potential. We are studying those companies at this juncture. Literally, having too many options, I would put it across as far as selection is concerned. But let us study it first and then selectively buy into them gradually.
Okay, Devin, thanks for joining us on that note. We have just 20 seconds left for the market opening. Mitesh, very quickly, would you short either Wipro or Mindtree this morning?
Wipro maybe yes. I think Mindtree no. Mindtree is already fallen and quite oversold. But Wipro, I think if it breaks this pivot levels of around 255, 256, then I think I would attempt a short.
Okay. Well, that's just about 3 or 4 seconds. So we'll wait for the opening bell to go. It looks like a slightly tepid start. There goes the bell. 16 down on the Nifty at opening track. Now it is about 18 points down. 60 down on the Sensex. That's 39,160. And the Nifty Bank is showing as much of a cut, 0.1, as the Nifty. It's about 50 points down as far as the numbers go. The mid cap is, okay, a little worse, but not a whole lot. It's about 0.25% down, that index. Advanced declines are starting in favor of declines. Okay, Yes Bank is at 12.5% cut. So it's now set a new 52-week low for itself. 86 rupees could be, of course, a life low as well. Other stocks that are showing pain, Indiabulls Housing down 1.2. HCL Tech 1.2, but where's Wipro? It's not in the top 10 list of losers. What's the Wipro stock? Has it already digested all the losses? Okay, there it is. It's up 0.2, indicating probably that the losses or the bad news was already digested. So your losers also include Titan, 1.1 down, HCL Tech 1 down, Tech Mahindra about 1 down, Infosys 0.9. So today all the techs have fallen, but Wipro not by that much. TCS is down 0.8, Vedanta, Hindalco down 0.8 each, L&T down 0.8, IndusInd down 0.7, steel. So metals and IT are clearly taking it at the chin today. And of course, Yes Bank separately. But otherwise, banks are not doing too badly. Axis is in the green. HDFC Bank is in the green. And besides that, there's Aisha, NTPC, Bharti Airtel. Wipro is actually now 1% higher. So as Sandeep was saying, maybe the buyback news will still keep it high, but the fall may come thereafter. At the moment, Wipro is the best performing stock in the Nifty, 1% higher, but you can't be so positive about the Nifty itself, which is down almost 0.25%.
Okay, yes, it's a weak opening for the market. No two ways about that. The mid-cap index is now down almost 60 points, which is 0.3% lower. The market breadth is weak at over 770 points on the declining side. The stock of the moment on the downside in the broader markets is Mindtree. It's almost 10% knocked down post a very weak set of numbers and the management scaling down its guidance. Torrent Pharma is the other one that's getting hit very hard. It's down about 5% as its Dahej plant has been classified as an official action indicated status, which means that there is a fear of escalation of this to a warning letter, and that's why the stock is under pressure right now. Apart from that, Jubilant Foods is down almost about 2%. The same store sales growth of Domino's in the US has seen some pressure. In fact, it's been lower than their guidance as well. So there's just a sentiment impact that you're seeing on Jubilant Foods this morning. The weakness in Mindtree's numbers has soured the sentiment in the entire mid-cap IT space. Hexaware is down more than 1% right now. A couple of other smaller mid-cap IT names were also under pressure. Apart from that, some auto ancillary stocks under pressure. Bharat Forge has resumed its sell-off, down about 1.5%. Not just auto ancillaries, but auto financiers also continue to be lower. So Shriram Transport is one stock under pressure. By the way, both Yes Bank and Mindtree have hit fresh lows this morning. Yes Bank at 89 and Mindtree at sub 700. So those are the stocks that are on, that are the big stocks in focus. But now the Bank Nifty has moved into the green. So in the first 5 minutes of trade itself, it's getting really volatile.
No, I'm not at all surprised by the Nifty Bank's performance. It's got a couple of things going for it. The yields have crashed. And for public sector banks, even for private sector banks, you have to hold 20% of your deposits in bonds, and these bonds in the last 2 weeks have become 5% more expensive. So that's mark-to-market gain, as well as the IBC giving some hope that bankruptcy recoveries will come. So I'm not at all, and crude is down today. So there's an immediate trigger as well. The Nifty banks outperforming the Nifty is not surprising, but today's expiry day, so anything can happen going forward. Let's get to our guests. Ashwini, how do you trade this opening?
See, like I said that, gap down will mean you should buy. Broadly, we've tested yesterday's lower range, lower end of the range, which is about 11,650. My sense would be that we should do a range of 11,650 to about 11,700. And Bank Nifty is showing you that yesterday's breakout could continue. So my sense is that the Bank Nifty will likely make up for what IT is losing.
Okay, yes, the Bank Nifty has moved into the green, but now there are plenty of other stocks in the broader markets that are falling off. A lot of these auto ancillary names are under pressure. Minda Industries is down 1.5%. You have Bharat Forge that's building up in terms of volumes as well, now down about 2%. And Cummins has been under a lot of pressure ever since its MD resigned. So Cummins is now down about 1% or so. Mitesh, what would your thoughts be on market opening, and any stock specific ideas?
Yeah, so I think, very quite in line with the SGX kind of an opening, but two key observations which I could make early in the morning was one, auto stocks, and you were pointing out to auto ancillaries, but even auto stocks are still looking weak. Mahindra and Mahindra, Bajaj Auto, I think both showing negative signs, while a couple of banking names look positive. So I think it would be a good idea to explore long ideas in the banking side. I would still recommend a Kotak Bank to be taken as a long trade, while on the short side, Bajaj Auto and Mahindra can be taken in the auto bank.
It's an early covering after the first sell. Yes Bank started about 12-13% lower. It's now 8.8% lower. And likewise on the index, we saw the Nifty go down 0.25%. So it was a cut of about 25 points. Now it's a cut of about 16-17 points. So the first dip has been bought in certain cases, or maybe just shorts covering. Jay, what have you made of the beginning indices? Will you have any long trade on the Nifty Bank and any other stocks?
Yeah, as I said in my opening comments, you just have to wait for the first 15 minutes for the markets to settle down. The trading on these days are not going to be easy. So you don't want to be getting into the market with some preconceived notion. Wait for reconfirmation from the market's price action. So another 10 minutes for the markets to settle down. I think the markets are weak and are breaking down. And that's opinion based on yesterday's price action. So if the markets were to confirm what my interpretation is correct or not, we want the market to go below 11,650, which is yesterday's low. And once that happens, you want to go short on the Nifty. And I don't think it's going to be a huge range breakdown today. So be quick on the short side and make a quick buck. And the banking index is slightly stronger. So watch out for Axis Bank. If Axis Bank can stay above 740, I think the index is going to hold, barring any other bigger frontline private banks breaking down. I think the banking index is slightly stabler. So it'll be a no trade for me on the banking index, but I will look for shorting the banking index. And IT continue to be negative. HCL Tech is again looking a bit weak, so I will look to short HCL Tech with a stop above 1,035.
Okay, well, Yes Bank is getting dumped now big time. I mean, almost 4 crore shares, more than 4 crore shares right now being traded on the downside, and 10.5% gone there. Let's thank all our technical experts for joining us and taking us through the market opening. It's a subdued opening, no two ways about that. The mid-cap index is falling further now, down about 70-odd points. Saurabh Mukherjee, founder of Marcellus Investment Managers, joins in now to talk about all of these issues as well as how he is approaching the markets. Saurabh, hi, good morning. I wanted your thoughts first on what's happening with IT, because we have more misses than hits this time around, whether you talk about TCS, Wipro, Mindtree, etc. Is this a space to move out of, or would you look for some opportunities here?
No, I think, look, I mean, as we've discussed in the past, there are two different drivers of Indian IT companies' earnings tailwinds. One is the structural strength of, say, a player like TCS, which we have liked for a long time. It's in several of our portfolios, and I own it personally as well. There is the structural strength that, say, someone like TCS has in outsourcing. But unquestionably, whenever they get currency tailwinds, in a highly competitive global IT sector, Indian IT companies, Indian IT services companies get helped by currency tailwinds. Those currency tailwinds haven't been forthcoming in the last 5-6 months, and therefore you're seeing an ebbing in earnings growth momentum again. My reckoning is at around 69.70. I think the rupee is overvalued, and if you look at weak exporters' performance, if you look at how weak our export performance is as a country as a whole, I think we have had the weakest export print in 40-45 months or so recently. I think if you want to buy Indian IT, the main trigger you're looking for is currency weakness, and I think the weakness in export performance does point to the rupee being significantly overvalued. So I've always taken the view, buy champion companies and sit back and let them compound. And with our TCS holding both for in our clients' portfolios and in my own portfolio, my view is a stock like TCS, I'll prefer to ride through it. On second rung IT companies, I would have greater concerns. Second rung IT companies, I do feel face competitive pressures that will force many of them to gradually consolidate. But on a scale gorilla like TCS, my concerns.
Okay, I think we just lost that connectivity, but we'll come back to Saurabh in just a bit. Now, you know, the problem for Yes Bank is as follows. The market cap, and we are writing about the erasing of the market cap, it has now come down to 20,000 crores. So if you want to raise $1 billion, that is 7,000 crores, now it becomes, you know, a 30% dilution. If you add 20,000, you add 7,000 crore, you've already diluted it by almost a third. So those who are putting in money have to be very patient money, because there is dilution, then there will be growth, and it will have to be distributed over a larger share base. They have to wait for growth, they have to wait for returns, you know, even for the ROE to cross the cost of capital. Cost of capital in India would be say about 12% at least. For a share like this, you know, that is the problem. Who will be willing to wait? There may be people, a lot of people like to be in the Indian private banking space, so maybe they'll come, but nevertheless, with the fall in share prices, this becomes the problem, that there will be more dilution. It becomes a bit of a vicious cycle. Saurabh, back with us, and you were just telling us that TCS is your chosen stock in that pack. Yes Bank, do you think that it will be able to find patient capital that will wait for till growth comes back?
I think, Lata, without my giving a stock-specific comment on the said bank, I think the overall challenge for Indian lenders who are wholesale market funded, whether they be banks or NBFCs, I think the overall challenge will be, I think it'll be extremely difficult for lenders with challenged balance sheets, private sector lenders with challenged balance sheets, and especially if it's private sector lenders who rely on wholesale market money, CD money, CP money. I think these guys are really, they have got their backs to the wall. There's too many of them who need money. There's a great deal of skepticism in the money market with regards to the balance sheets and the credit ratings that these lenders enjoy. And I think without taking any one bank or any one NBFC's name in particular, I think the next 4 or 5 months, the biggest challenge we'll face is the challenge of these beleaguered lenders whose balance sheets are punctured, and where the market really has got very little faith in the credit ratings that these lenders have been given over the years.
But don't you think that many of these lenders would, the financial creditors would gain from the new amendments to the IBC, especially the fact that financial creditors will now be given precedence over operational creditors?
I think there's two different issues I think that are being addressed here, Sonia. One is, as you're absolutely right in saying, the whole workout process, the whole bankruptcy process in India needed an overhaul, and I'm glad to see that quickly after the elections, the government has rectified the damage caused by the Honorable Supreme Court's judgment from 4 or 5 months ago. But a separate issue is can financial markets believe the balance sheets of listed entities? Can financial markets believe the quality of the credit ratings that are being stamped upon these balance sheets? I think that's a separate issue. It's a trust deficit. It's a trust deficit which is across the market, but particularly acute for banks and NBFCs, given that these are highly levered entities that typically levered 9, 10, 11:1. So for highly levered balance sheets in the financial services sector, I think the trust deficit around financial statements, around credit ratings is immense. And therefore, if you have a punctured balance sheet at this juncture in India, I think you really have a big task ahead of you to regain investors' faith, both debt investors and bond market investors' faith. So I think it's a big challenge for all of these guys, and there are several of them facing this common challenge at this point in time.
Well, I mean, this is not an analysis of who went wrong, but I think the political economy also let down the banks very badly. I mean, it's not their fault that the way the power sector has been treated so far. And it's even now, I don't think state and central governments have really got their act together, though some very good announcements have come from the power sector. Anyway, that discussion for another day. Saurabh, where else are you training your... you said you've bought the leader of the pack in IT. Which other sector? I mean, what are your thoughts on consumption?
Sure. So I think I'll just give you a quick perspective on why, given that I'm fairly pessimistic by nature, why I'm actually less pessimistic for a change. I think what I'm seeing is with inflation muted, with the RBI being willing to keep monetary policy easy, I think there's a good chance that not only will we see a 25 bips rate cut in August, we might even see a 50 bips rate cut. With oil behaving itself, I think the liquidity outlook for our financial system is probably the brightest it has been for a long time. I thought it was a decent budget by the new finance minister. I know several people disagree with me on that, but I think the liquidity outlook is good for our country. The currency is behaving itself for now, and given that backdrop, I think banks, well-run private sector banks, well-run NBFCs will consolidate market share. So say 2 or 3 well-run banks, couple of well-run NBFCs. If you sort of look at the outlook for them over the next 2-3 years, I think it's immensely positive. They'll consolidate the lending economy. The other space where I'm not losing as much sleep as some other people is the FMCG space. So a stock like ITC, we've held it in clients' portfolios for a long time. Again, I hold it PA as well. So a stock like ITC, my reckoning is this is a monopoly. There is no other word to describe it. This is a monopoly in a cigarette sector with an addictive product. We are the world's youngest demographic. ITC stock hasn't done much in 3 years. I think it's a straightforward opportunity for long-term oriented investors to buy, sit back and make money. Overall, the FMCG pessimism, this notion that somehow FMCG companies are going to fall off a cliff, I find that remarkable. These companies have ROCs of 40, 50, 60%, immensely cash generative balance sheets. They have delivered stellar results decade after decade. So a Nestle, a Pidilite, an Asian Paints, Marico, these are all holdings in our portfolios, and we continue to believe that this sector will make steady money for us. So the more pessimism people build about the FMCG sector, the happier we at Marcellus get. And it's interesting, I met several pension funds and endowment funds in America over the last 6-7 days, and they were saying that if you look around the world, if you had to identify one EM, one emerging market where over the next 10 years you will see steady growth, that answer would be India. So the optimism of institutional money overseas contrasts starkly with the pessimism on the ground with regards to the overall macro and specifically with the FMCG sector.
Okay, well, we have run out of time, but you've gotten us thinking about the FMCG space and gotten us a bit hungry also, because we're going to be talking about Jubilant FoodWorks. It's breakfast time, and in the US, apparently Jubilant, the same-store sales growth has not grown as much as what they guided for. Domino's is what I'm talking about. So Mangalam is here to tell us that. Mangalam, of course, there's Colgate as well that comes out with its numbers, but first on Jubilant Foods, what is the CLSA report indicating?
Well, the CLSA report is indicating that, the reason why the US same-store sales growth for Domino's came down was because of the competition coming in from O2O, which is online to offline ordering, some things that we do on our phones as well. So while there is no straight correlation between Domino's US SSSG and India SSSG, they're drawing parallels between the trend that more online shoppers or more online orders are hurting Domino's sales in the US, and that is likely to happen in India as well. So the key reason for miss is huge discounting that has come by in US online to offline orders. So that is something that will play in India that may impact Jubilant FoodWorks' pricing power. But from a long-term perspective, yes, the pizzas are good. India has a huge appetite. So they continue to like the story at these valuations, barring this blip. But this is definitely a blip that they're watching out for.
Okay. You get exactly 1 minute to tell us what to expect from Colgate.
Well, exactly 1 minute. Colgate, you expect a weakest set of numbers because of a couple of reasons. One, rural growth has not come by, and at entry level there has been a fair amount of competition, and Colgate has been losing market share. So 5.5% in terms of the company's revenue growth is what we're expecting. The EBITDA likely to grow at a pedestrian 3.5%. Net profit optically looking to decline by about 10%. That's only because of a exceptional gain in base quarter. The key number to watch out for will be a 4% volume growth. So that's what one can expect from Colgate.
Okay, so the famous Colgate smile is not there when the earnings come. Fair enough.
That's some good timing, right? I mean, you gave him 1 minute, and I think in 30, 40 seconds.
No, now we can't speak because we have to get to the Yes Bank interview, which was scheduled at 9:35. The numbers had some terrible disclosures in terms of the BB and below book, and that's what my colleague Ritu Singh will be or had quizzed Ravneet Gill about. Here's a slice of the conversation that Ritu Singh had with Ravneet Gill, Managing Director and CEO. She began by asking him about the surge in slippages.
BB and below book that was there, which was the sub-investment grade book, I think that went up by 6,000 crores. And it's important to recognize that the 6,000 crores increase came only from two names, from exposures to the financial services sector, and which is now reflecting in the MTM that we've taken for the quarter. So the slippages were not 6,000 crores, the slippages were roughly about 4,500 crores.
Okay, where does this BB and below and watch list stand? And you know, what is the distinction really when you anticipate future stress? Which book are you looking at?
So the genesis of the watch list really is that, you know, what we wanted to do was look at our sub-investment grade book very closely and see where were the, you know, the potential slippages that could have accrued in the short term. And we wanted to flag those to investors before raising capital rather than doing so post. So it was drawn out of the BB and below book.
Okay.
The BB, and as far as the slippages are concerned, roughly about 2,500 crores have come from the watch list, and the balance has come from the BB and below book.
Okay, you know, where does the watch list stand now? I believe as of last quarter it was 10,000 crores.
Yes.
And where is the BB and below rated book now?
So last year, for the last quarter, the BB and below book was 23,000 crores, and the watch list was 10,000 crores.
And the watch list was part of this 23,000
Exactly
crores.
right. So the watch list of 10,000 crores remains the same. And even though only 2,500 crores has slipped, we continue to look at the balance 7,500 crores very closely. As far as the BB and below book is concerned, that is the one that has grown from 23,000 crores to 29,000 crores, and we think it has now peaked. We don't see a further expansion in this book. On the contrary, as resolutions happen, and we expect at least a couple of those resolutions to happen this quarter, you will actually see that book contract.
So, you know, how much of this BB and below book, which includes the watch list, do you expect will see some slippages in the next quarter or so?
So one of the sectors which, you know, we often talk about and which has a lot of analysts and investor interest is really the real estate book of Yes Bank. So the real estate book of Yes Bank is about 24,000 crores. 25% of that book already has been captured in our BB and below book and in our NPAs. As far as the balance 75% of that book is concerned, it is completely top class. It has seen minimal impairment. And if I look at even from a SMA2 perspective on that entire book, it's roughly about 240 crores. Okay. And if or 250 crores. And if I look and I put that aside, for the rest of my corporate book, SMA2 would be about 150 crores. Okay. So what I'm saying is that the SMA2 on our overall corporate book is about 404 crores.
DHFL, ADAG, SL, these are recognized companies, which are known in the market for the stress, and we, assume that they were part of your BB and below rated books. Now there are new names coming up, Cox and Kings, there's Everready, there is Syntex. You know, which of these new names in the market do you have exposure to, and therefore what would the total size of the stressed book that you're looking at be?
If you look at our BB and below book, which we have put out in the last quarter, it had the entity of Cox and Kings, which eventually slipped in this quarter. So it's not as if that it was something which was unforeseen or it was something that we had not anticipated.
Okay.
That name was very much part of the BB and below book,
okay.
and it slipped. So it wasn't a surprise. And like I said, that the entire 4,500 crores of slippages for this quarter have actually come entirely from the BB and below book, of which, like I said, the watchlist was a subset.
So, at 5% GNPA levels, where do you see this stabilizing for the bank when you're confident that it will not worsen from there?
If you look at our BB and below book, it's not a very large granular book. It's not somewhere which is deeply colored by a particular sector or a particular industry. So this is not that has a derivative of a cycle. This is just a handful of concentrated exposures, and which could, when the resolution happens, turn around very quickly too. So like I said, that of the names that are there in the BB and below book, I definitely see resolution happening on at least two of those names in this quarter.
Which would be? DHFL is that one of them, or ILNFS?
It may not be right for me. It may not be right for me to take those names, but two very material exposure which are there in the BB and below book, which I think will find resolution in this quarter, and which will again substantially reduce our BB and below book. Substantially.
So what is the number that you'll be targeting then? From 5% GNPAs, where do you see yourself stabilizing?
So it could be a significantly lower number.
Okay, I know you've given a 125 basis point credit cost guidance, but that is factoring in all of these new accounts, including the Andhra renewable energy crisis now. It should not rise below, above 125.
No, so we were very clear in terms of, our credit cost guidance. Our credit cost for the first quarter is 32 basis points. And this is at a time when we haven't seen recoveries, and a lot of the headwinds that, that some of these names has faced is front-loaded. So every reason to believe that, we will come within our credit cost guidance of 125 basis points for the year.
What about your coverage for some of these stress loans as well that you've spoken about? 43%, are you satisfied with that?
No, I think very clearly as a bank we want to get to a level which is closer to 60%.
60%.
What we had said was that we will not compromise on the 43% which was there last quarter, and we maintain that even for this quarter.
How much capital do you require, and how much would it be for growth, and how much would be required to make provisions and for cleanup?
Even in a year like this, if you look at the pre-provisioning operating profit that we generated, that in itself is enough for me to be able to make provisions on the BB and below book for any slippages that happen.
So you only need growth capital?
So I have enough. The PPOP that I'm generating, even in a quarter of consolidation, and it'll only grow from here, is sufficient over the next 8 quarters for me to be able to provide for any slippages that may occur in the BB and below book. So the capital that we're looking to raise right now is purely growth capital. And I would again just reiterate this point, this is not being raised to heal the balance sheet, this is just pure growth capital.
So you saw a 10% growth in advances in this quarter compared to the previous year. What sort of growth are you anticipating for which you need the capital?
So I think, once we have the capital in place, what we would like to ideally grow at is in the mid-20s. Our aspiration is really to be able to grow in that ballpark. And if you look at the current market opportunity and the dislocation that exists in some of the sector vectors of the financial services industry, I think the market opportunity is very compelling.
So how much capital then, is my question, do you need to get to that mid-20s growth level?
So we will also accrue capital organically, accrete capital organically. So it's difficult to put a number on that.
But a rough estimate that you would have had?
No, I think we'll go with the a basic thumb rule for banking, that more capital is better than less, and that's something that we are in very close discussion with investors right now, in terms of what is the structure, what is the size, what is the composition of that capital, and we will raise whatever is needed.
How much would, could you give us a ballpark? Is it $1 billion? Is it 1.2, $1.5 billion? How much do you require?
I think those numbers, would see us through in the medium term.
$1 billion?
In the medium term as well.
Okay.
So we don't need to raise that much. We always have the option to be able to phase that out as well.
Okay.
But the number that you are talking about will actually solve for our credit needs for the medium term as well.
So am I to read this as $1 billion approximately in one or more phases?
So, like I said, that we don't have a number which is boxed down just yet. But I'll go with the thumb rule that more capital is better than less.
All right. In the event that your share price has fallen significantly in the last month or so, it's now at 98. At this level, with your current market capitalization, and given that RBI does not allow an entity, a sovereign wealth fund, to even hold more than 10%, would you be looking to bring in 1, 2, 3, 4? I mean, how many investors would you need to bring on board to raise the kind of capital that you're speaking of?
Yeah, so I think clearly there are multiple options. One is that we do private equity plus a public markets transaction, or we just do a public markets transaction, or we get a clutch of private equity players to be able to come in and solve for the capital that we decide to finally raise, given the fact that there are restrictions with regard to how much a single entity could hold. All those options are available, and all those options are on the table as we speak.
Yeah, we're aware of all of these options being on the table, but given that you said you're looking to raise this capital in the current quarter,
yes,
in the second quarter, how many such players are you in talks with?
So again, I think these are confidential discussions that we have.
If you could give us a number as to how many investors you would need to bring on board.
I think all that I would like to say at this point in time is that over a period of time, one of the things that investors have seen is that if you look at the Yes Bank asset portfolio and you see the issues that need resolution, those issues are just a handful. And each of those resolutions increases their upside materially, which has obviously made them very interested, made them very engaged. So we have multiple dialogues which are on as we speak.
Okay.
And I think between all of them, we can solve for our entire credit needs, capital needs, sorry.
To what extent are you willing to dilute? That's another question that we wanted to ask.
I think every stakeholder of the bank, and when I say every stakeholder, I mean every stakeholder of the bank, is completely aligned to doing whatever is in the best interest of the bank, whatever enables the bank to be in a much stronger position to grow at a much more robust pace. So we are very flexible in terms of the level of dilution, but
is there a cap that you have in mind?
So what we went out with, and which is what the market believes, is either $1 billion or 10%, whichever is lower.
What sort of guidance could you give the markets in terms of growth, in terms of raising capital, in terms of improving your asset quality that should repose the faith of investors, where we've seen a lot of negativity surrounding the stock in the near term?
I have consistently maintained that the concerns around Yes Bank's asset quality has been overdone. From here on, you will see a very robust recovery in terms of the overall book, which is the sub-investment grade, and which should translate into much higher revenues.
Okay. It's a difficult time. $1 billion, Ritu, I think, could extract that, which means about 7,000 crore, and that will be dilutive by about 30%. And even that might suffice only for about 2 or 3 years in terms of growth capital, because you will use up 50 basis point every year in growth. Therefore, there is a problem. The capital will have to be very patient, and as Ritu pointed out, already you are at 20,000 crore. So to raise 7,000 crore, RBI allows one person to have maximum 10%, even that with permission. Normally it's 5%. So if it's 5%, then you need at least 10 funds to be patient. If you can get it to 10%, then you will need at least 3-4 funds which have to be patient. It's a very difficult investment banking job that they have. But yes, there will be a lot of people who like to take exposure to the Indian banking space. If you can find patient capital, then Yes Bank will see through this trough.
Okay, well, on that note, let's just give you a quick update on the market. It's still under pressure, by the way. The mid-caps are now still down over 100 odd points. We'll take a break, and when we come back, we'll discuss the other big issue. The Cabinet has approved 7 amendments to the Insolvency Code to give more teeth to this law. It is, of course, positive for the banking sector. VG